Good afternoon, everyone. I'd like to welcome you to this Ethics Meet the Business webinar with Low Carbon Hub. My name is Josh Brewer. I'm the Senior Business Development Manager here at Ethics. And today, very pleased to have Barbara Hammond, who's the Low Carbon Hub Chief Executive Officer, and Saskia Huggins, the Social Impact Manager, and talking in this webinar about the latest offer for their innovative Community Energy Fund. This is off to a great start already on the Ethics platform, raised over £250,000 to date. So Barbara and Saskia will do a sort of 15 to 20-minute presentation, and then we'll open up for questions from you guys in the crowd. Ethics and Low Carbon Hub have a really strong relationship over several years, going back to 2014. This is their fifth raise with us. To date, they've raised around £3.7 million, but our relationship sort of goes beyond that as well. We're both Oxford-based social enterprises. There's a magnificent hydro scheme here on the river as a result of their work. And then for me, on a personal level, the solar panels on the roof of my kids' school were put there by Low Carbon Hub. So their impact is really material, and they're just a great organisation. So in a minute, we'll head over to Barbara and Saskia for them to run through the funds. But first, just a few bits of housekeeping from my colleague, Rachel.
Hi, thank you. As Josh said, I'm going to hear from Low Carbon Hub. If anybody wants to ask any questions at the end or have any questions that they'd like to speak to during the presentation, please can you do that via the Q&A panel that you'll see on the right-hand side of your screen. Alternatively, you can also raise your hand using the dashboard, and then I can unmute you to ask a question. So that's pretty straightforward. So any problems, then just let us know via the chat box. Otherwise, use the Q&A functionality on the dashboard, or raise your hand, and I can unmute you.
Okay, thanks, Rachel. Right, so I think that's over to Barbara and Saskia. Take it away.
Thank you very much, Josh, and thank you everybody who's on the webinar for giving up your time to listen to us talk about ourselves. As Josh and Rachel were saying, the Low Carbon Hub is a community benefit society based in Oxford. We also have two sister organisations, Low Carbon Hub KIC and Sanford Hydro Limited. So we work as a group of social enterprises. And our overall aim is to get local power into the hands of local people. So we want to make that transition from a very centralised fossil fuel-based system to a very decentralised renewable energy-based system. And we believe that that transition is facilitated if you get real local people involved in helping to make that happen. The diagram that you've got on the slide at the moment shows that overall structure that I was talking about, and shows a little bit about where the money goes between the organisations. So we take investment into the Low Carbon Hub IPS on the left-hand side, and for those who invested in Sanford Hydro Limited, that is then lent through to the wholly owned subsidiary. All of the projects that we own then make an income, and we share that between the return that we make to shareholders, the energy discount that we give to our the hosts of our roofs. The schools therefore benefit also, and then we have a community benefit surplus left over that goes into further community-based projects managed through the Low Carbon Hub KIC. So you can see from that we get a really enormous bang for our buck and make a huge impact with what we do. And just going on to the next slide, you can see where we've got to so far. So 38 renewable energy installations, £4.1 million of investment and over 800 investor members. Over the next 3 years, we want to increase that investment, sort of doubling our investment, doubling our number of investor members, to carry on installing renewable energy projects even though the feed-in tariff is going to disappear next March. We've got some very exciting projects in the pipeline for that period, but we really want to concentrate on getting as many schools projects through before the feed-in tariff ends as possible. And on the right-hand side of the slide, you can see, in summary, what all of that means for our social impact metrics of planet, people, prosperity and perception. I won't go through that in detail now, but if anybody has any questions about how we do all of that, we're very proud of the system that we have for measuring and monitoring and reporting all of that. We think that makes us stand out from even the rest of the wonderful set of community energy social enterprises we have in the UK now. Just to give you a sense of some of our projects, here are 4 of them. The one on the left-hand side, the Oxford Bus Company, was our first ever installation in 2013. And we really love that installation because it's been the beginning of a partnership with the Oxford Bus Company that continues to this day. So the financial and commercial director from the bus company is our treasurer and puts in a huge amount of work to help keep the low carbon hub healthy. But we're also talking to them all the time about potential new projects, and we really hope that 1 or 2 of those will come to fruition, maybe in our next round of projects post-FIT in 2019. Orchard Fields Community School. It's I was really amazed that a building this size is actually a private primary school, and you can see that it's got a lovely curved roof that we've been able to put a load of PV panels on, and so it's the largest primary school installation in Oxfordshire, and it meets 39% of the school's electricity needs, and that is really important to us. We like to size our installation so that we meet as much as possible of the school's energy requirement. And one of the things that we have in the planning is to work out how we can make those projects even more effective with new technologies and new combinations of technologies coming through. Sanford Hydro, Josh and Rachel mentioned in the introduction, we really are proud of this. It doesn't form part of the Community Energy Fund portfolio of projects that we're talking about now, but nevertheless, it is something that is it's a huge thing. Literally, if you go to Sanford and have a look, it generates a huge amount of electricity, and we're really hoping that we can extend that project to becoming a smart energy project, that we can be balancing the generation with consumption locally. And if that gets nearer to fruition, we'll certainly be putting more information out about that, but it's really, really exciting what we might be able to do as a result of putting that hydro in. And then our newest, latest, one of our smallest projects, but nevertheless, Sonning Common Primary School. It's still worth doing. I mean, I think we shouldn't always be talking about what's biggest, what's brightest, what's best. We need to be doing the small, the very local. Those are as effective if we can get lots of them happening as the big sexy ones. And we love Sonning Common Primary School for having come into the latter end of the feed-in tariff. So that's a flavour of some of our projects, and I'll hand over at this point to Sassy Huggins, who'll be able to outline more detail about the Community Energy Fund.
Thank you, Barbara. So Barbara's given you a flavour of what we've achieved so far. We've launched the Community Energy Fund because we've got ambitions to really continue to grow and to ramp up into a new ambitious phase of activity. Over the next 3 years, we're looking for another £4 million worth of investment. We want to both strengthen and grow our portfolio of community energy projects. And we also want to put ourselves in a position where, as new community energy projects come forward, not just renewables, also perhaps insulation, storage, energy balancing projects come through to investment readiness, we've got the fund ready and poised in the future to be able to grab those opportunities and run with them at the time that's appropriate. So that's what's in it for us as the Low Carbon Hub. That's why we're really keen to increase our equity base, but wanted to touch upon why people might want to invest in us and what the direct benefits are for our investor members. So with the Community Energy Fund, we are offering a target interest rate. We want to offer a decent return for people who've given us their savings and hard-earned cash to put to use like this. Our interest will be being earned from the day that the money is invested and accepted into the fund. For the first 4 years, we aim to offer 4%, but that will then increase to 5% after those first 4 years. That's our target. The reason for us is that we really want people to view an investment in the hub as a long-term relationship with us, a long-term way of supporting community energy, and so we want to be able to reward that long-term investment. People who've invested in us in the past may be aware that the way our projects work is that over time they gradually release capital, which enables us to pay back people's investment over a 20-year period. So people have signed up to a sort of a 20-year investment in a particular set of projects, and that's released over time. This time, we've changed things. We've put in place an equity withdrawal mechanism. So instead of being made to take small amounts of your capital back over that period, we're giving people the right after 4 years to apply to say that they'd like to withdraw that capital, or perhaps they'd far rather just leave it in. We do very much hope that people will view this as a long-term investment, and we must stress that we can't guarantee that we can facilitate every equity withdrawal request that we get in, but we wanted to put that flexibility back into the hands of our investors so that they could at least decide when they had the ability to apply for that money back. Now, we do want people to view this as a long-term relationship with the hub, but we do appreciate people's circumstances change, and there may be times when you feel you need to be able to access your equity. The third thing that we're offering back is regular feedback on the difference that your money is making. For many of our investors, this is the thing that they value most about their relationship with the hub and their investment. It's providing a really practical opportunity to use your savings to make tangible difference in the fight against climate change. And we're able to feed back and show you exactly the difference that your funding is making. We're doing regular feedback about the green energy and so the carbon savings that the money's being put to use. It's also giving feedback about things like that discounts that we're offering schools, so that's social benefit that's happening back at a community level. Also, 100% of our surpluses are then given to the Low Carbon Hub KIC. You remember the second organisation in that diagram from earlier, and we use that to benefit the community, and it's specifically put to support further carbon cuts through supporting community action. It's through offering grants to community groups, help desk services, and also supporting more social enterprises and innovation around community energy. Finally, it's an annual opportunity. So the idea is that this isn't something that you invest in once and then it's tied to a set of projects. Every year we're going to be opening up this fund with new projects, new activities, and a new way that you can continue to support community energy. So our first investment opportunities, we're currently looking to raise £1 million to support our first phase. The first thing we want to do is to put as much new solar PV array on schools across the county before the feed-in tariff comes to an end in March 2019. We've got a great relationship with the County Council, who have really been working with us to try and make things as easy as possible for schools to get on board and benefit from the feed-in tariff and this opportunity while it still exists. The second area that we're looking for funding is to replace existing debt funding in our Solar 16 portfolio. This means that the money will be going into a bunch of projects that are already operational and generating electricity and therefore generating income, and that's why we're able to offer interest payments from very early on in the investment of this project. So minimum investment in the fund starts at £250. This can go up to as much as 100,000 if that happens to be what you've got in your back pocket. We're trying to raise £1 million by the end of this month, the 31st of July. And to find out more about the project that we're investing in, the full terms and conditions of the share offer, and to apply, the details currently of our website are up on the screen. That's the lowcarbonhub.org/invest. As I mentioned, this is an ongoing project for us. We want to then use the Community Energy Fund as a way to continue to fund any new investment-ready opportunities that we've got. And we think that this is quite an exciting time for community energy. Traditionally, a lot of projects have been focused around generating, but in the future we can see a lot more happening in terms of energy efficiency, LED lighting, storage, balancing projects. And as those start to come to the forefront of community energy, that's what we also want to be ready and poised to take those opportunities. We are also going to be raising debt. We mentioned that we have put in the equity withdrawal facility, and the fund also offers us an opportunity to bring in new investment to enable existing investors take their capital out should they wish to do so. We've now got, already have 800 investors who have supported us, and we're really, we very much see ourselves working in partnership with those members and with the various community groups who support our work and we work with. I'd really like to encourage you to go and look at a video we have on our website. We've asked a lot of our members and community groups about why they've joined with us. And so if you've got another couple of minutes at the end of this, do please go and watch our video so you can hear a bit more from some of our partners and our stakeholders about why they want to work with us and support us. So you can find out more there, but I'm going to hand you back to Josh for any Q&As.
Thanks, Aska, and thanks, Barbara. I would just like to say that if you do want to find more information about this offer, then please come onto the FX website, and on there you'll find a great deal of information and a quite a bit accessible format about Low Carbon Hub and about the specific terms of the offer. And if you are considering investing, I would say to you that it's essential that you download and read that offer document, because that contains all the information you need in order to make an informed decision on whether or not to invest. So if people do want to put in a question, I'd suggest either putting it to the chat box or to the Q&A, but maybe while I just wait to see if any of those come through. I've just got a couple of little questions that I think might be useful if we could get some answers on those. So in terms of the withdrawal process that you have, how are you planning to prioritise those withdrawals?
So people will be able to apply to withdraw equity once it's been held in the fund for 4 years, and there'll be an annual opportunity to put in a request for withdrawal. The way we're going to prioritise withdrawals, should requests exceed the available capital, is as follows. First of all, we'd be looking at any cases of personal hardship. So, for example, should people be suffering from a critical illness or redundancy, or have a really significant, unpredictable change in circumstance that we could consider on a case-by-case basis, we would want to prioritise those cases. We would then prioritise anyone who may have been unsuccessful in previous rounds. We would then look at the length of time that people had invested in the fund, and then finally look at the amount requested. We'd endeavour that we were able to meet the first £250 of every request. But, you know, as I say, we've got mechanisms in place to raise the equity to enable us to facilitate that much as possible, but we would want to stress that it's not guaranteed.
Great, that's fantastic. Thank you. And another question, is there any tax relief available on the investment?
So sadly, back in 2016, the government ceased to provide relief on the generation of renewable electricity schemes around EIS, Enterprise Investment Scheme tax relief. However, there are still a couple of other tax reliefs that's worth people bearing in mind. The money that we pay each year to investors comes in the form of interest, and as such, it's eligible for personal savings allowances. This means that if you're a basic rate taxpayer, you can earn up to £1,000 in savings income tax-free. Higher rate taxpayers, that's £500. So if you as an individual are eligible, there's some tax relief there. There's also an inheritance tax benefit if we obviously hope this doesn't happen, but should one of our members sadly pass away and it's more than 2 years since they invested, the shares may qualify for 100% relief and the business relief for inheritance tax because the shares are unlisted.
Great, thank you. And then just in terms of interest payments, what's the target date for the first interest payment?
So the investment starts accruing interest from the day that the investment is accepted. The interest will then be paid over on an annual basis. The way it happens is that the interest is, and the way the interest is earned is through the generation of electricity and the performance of the projects in the fund. So at the end of each financial year, once we have our accounts signed off, we're then able to confirm the payments and make them out. Normally, we're looking by about August, following the end of the April financial close.
Okay, thank you. We've had one question come in from the audience. Is how soon will funds be invested into projects? Do you already have a project pipeline in place? And does this ability to bring this pipeline through have any impact on the ability to pay interest?
Great question. Thank you very much. So, yes, we do have projects in the pipeline that we are looking to build over the summer and the rest of the school holidays between now and March 2019. But one of the, yes, we expect to be investing in new projects. But the other thing to say is that in putting this fund together, one of the key management criteria for our investment committee, who will be the subcommittee of board making sure that it runs properly, is to make sure that we are not what we call over-capitalised at any point. So if we have raised money into the fund and it turns out that none of the new projects come to fruition, then we will be looking at how we make capital available to pay back at the next available opportunity. So we don't want to keep money effectively in the bank doing nothing, because that's not good for anybody.
And just to touch on the point I made earlier, at this stage, as well as investing in new projects, we do have these pre-existing, fully operational solar PV arrays where we're looking to refinance. We currently have over £1 million of debt financing sitting against that portfolio. And so as we bring money into the fund, it enables us to return that debt. If there's time, it might be worth mentioning a little bit about a fantastic partnership that we have with Oxford City Council. We're really lucky that they offer us some short-term debt funding. So, and that's the funding that's currently sitting against those projects. We are able to draw down short-term debt from the council, which enables us to jump on opportunities at the moment as they come up, which then enables us to backfill that with equity. So it means by balancing those two, we're, as Barbara mentioned, constantly doing our cash flows to ensure that we don't become over-capitalised. Using this balance between the debt, short-term debt facility and equity means we can just keep things nicely balanced so that the capital is really working.
And the even better thing about the relationship with the City Council, which has been absolutely fantastic and continues to be, is that short-term construction fund, very unusually, is at the same cost as our target rate to shareholders. So normally a short-term construction fund would be priced at 2 or 3% more than that. So, you know, we are very lucky, and we're in a position, therefore, where we've got a suite of funding that we can balance along as we develop our portfolio, and it puts us into a very flexible position. And that's one reason why we felt that at this point we were able to move away from the portfolio method of raising equity to this fund method of raising equity. And one of the things that we're thinking about doing over time is we haven't made the decision yet, but considering doing, is offering to our existing solar shareholders the possibility of moving their investment over into the fund. So we really do think that this combination of ways of funding is good for everybody.
Thanks, Barbara. Thanks, Saskia. I think that, as you've highlighted, the sort of innovative nature of the fund, and also the really progressive relationship that you've got with the council, and enable, you know, set you up really well to be positioned to take advantage of the opportunities coming through in terms of deploying solar. We are pretty much at our time limit there. So I'd like to say thank you to Barbara and Saskia for presenting there and doing a great job of telling us about the fantastic work that you do at Low Carbon Hub, and the opportunity that you're presenting through the fund to invest into that. I'd like to say thank you to everyone who's taken part and joined in the webinar and to listen in. If you do have any further questions, please feel free to get in contact with Ethics, and we can come back to you with answers on that. Also, come and look at the website, take a look at the profile for Low Carbon Hub and the offer documents. Okay, so just like to say thank you to everyone, and enjoy the rest of today.
Thank you, Josh.